U.S. stocks ended flat on Monday as increased expectations of stimulus from central banks around the world were offset by losses in technology and healthcare shares. Investors also appeared to pull back from buying after the market posted solid increases last week, strategists said. Microsoft was the day's biggest drag on the S&P 500 and NASDAQ. The S&P 500 Financial Index was among the day's best-performing groups, rising 1.5%, with banks gaining 3.2% and U.S. Treasury yields up on rising bets of an interest rate cut at the U.S. Federal Reserve's September meeting. Cementing those expectations, Fed Chairman Jerome Powell said late last week the central bank would act as appropriate to sustain economic expansion, a phrase that financial markets have read as a sign of an impending rate cut. Stocks rose last week, largely on easing worries about U.S.-China trade negotiations. This week, the European Central Bank is expected to introduce new stimulus measures at its meeting on Thursday. Earlier on Monday, U.S. Treasury Secretary Steven Mnuchin said he did not see the threat of a recession as the Trump administration seeks to revive trade negotiations with China, adding he expected a positive year ahead for the U.S. economy. In healthcare, Amgen fell 2.6% after analysts raised questions about data on the company's lung cancer drug, while the S&P 500 Healthcare Index was down 0.9%. The S&P 500 Technology Index ended down 0.7%. Among gainers, energy stocks rose along with oil prices. Among other stocks, AT&T gained 1.5% after shareholder Elliott Management Corp disclosed a $3.2 billion stake in the company and pushed for changes. Boeing fell 1.2% after it suspended load testing of its new wide-body 777X aircraft over the weekend, as media reports said a cargo door failed in a ground stress test. Advancing issues outnumbered declining ones on the New York Stock Exchange by a 1.49 to 1 ratio. On NASDAQ, a 1.51 to 1 ratio favored advancers. The S&P 500 posted 38 new 52-week highs and 3 new lows. The NASDAQ Composite recorded 63 new highs and 59 new lows. Today in the morning, shares in Asia traded higher as investors looked for concrete developments on U.S.-China trade as the threat of increased tariffs looms. Mainland Chinese stocks recovered from an earlier slip to rise by the afternoon, with the Shanghai Composite up 0.16% and the Shenzhen Composite fractionally higher. The Shenzhen Composite also rose 0.126%. The moves came after an earlier data released by China's National Bureau of Statistics showed industrial profits declining 9.9% year-on-year in October. Hong Kong's Hang Seng Index was fractionally higher. Hong Kong-listed shares of Chinese tech juggernaut Alibaba continued their upward trek as they gained 3.09%, following a blockbuster debut on Tuesday. Elsewhere, the Nikkei 225 in Japan rose 0.46% in afternoon trade, while the Topix gained 0.44%. South Korea's Kospi also advanced 0.44%. Investors continue to watch for updates on U.S.-China trade talks. Leading negotiators from Washington and Beijing held another phone call on Tuesday morning to discuss how to resolve core issues, China's Ministry of Commerce said. That was bolstered by comments from U.S. President Donald Trump, who also said Tuesday that Washington and Beijing are in the final throes of reaching a trade deal. Still, an anticipated Phase 1 deal between the two economic powerhouses has remained elusive ahead of December 15th, when additional tariffs on Chinese exports to the U.S. are set to kick in. That's all for today. Thanks for watching. Subscribe to our channel to track the market pulse and get the latest economic data.